Hey everyone, have you ever wondered how to generate passive income from your investment portfolio? As an actuary with over 10 years of investment experience, I've seen my fair share of income strategies. So join me because in this video, I'm going to run through the 5 key elements of income investing and how you can use it to enhance your life. So let's get into it. So what is income investing? So income investing is essentially buying an asset that gives you some form of regular payment. And this is described extremely well in Robert Kiyosaki's book, Rich Dad, Poor Dad, where he talks about having an asset, which is something that puts money in your pocket, and a liability, which is something that takes money away. And for me, this was like, when I first read this, it was just such a simple way of putting it, in the way that many people buy liabilities thinking they're assets because they have an ongoing cost. So for example, people might think that their primary residence is an asset, but actually that primary residence often has ongoing costs such as, land tax, and things break and you have to do renovations. So it might not necessarily always be an asset. So an asset is something that gives you some sort of income net of all fees and costs. I'll admit that some assets out there don't give you any sort of income, and instead they give you some form of capital appreciation. So that's the kind of other way you can get payback from your investment. So that means that you buy the asset at a certain price and you expect to sell it for more in the future, and that difference is the kind of profit you make. Feature number 2 is that there are lots of different assets that you could buy that could give you passive income. So real estate is the one that everyone gravitates towards because you can buy yourself an investment property and you could put a tenant in there, and that tenant will pay you some sort of income, i.e. you're collecting the rent from your tenant. I guess some of the challenges here is that you need to get a tenant, and then often houses are quite expensive, so you have quite a high upfront startup cost. And you might not be able to make much difference between your mortgage cost and then what the tenant's paying you. And it's also not necessarily 100% passive either, because you might have to do some work, i.e. getting the tenant, making sure the property stays in reasonable tact, communicating with the tenant. So it's not completely passive, but it's much easier than a 9 to 5 I'd expect. So bonds or other fixed income are another method of getting passive income. So that's where you typically just put your money in a savings account and then you get paid a certain fixed level of interest. Yeah, the downsides here is that if it's a secure bond, i.e. you've got low chance of default, then your interest rate is going to be quite low and probably not going to be, enough to live on, or if that's your intention, or definitely not as much as a property, and you're not going to get any capital appreciation either. You're just going to get your income. So that's an issue because the value of the bond might be eroded by inflation, for example. So this isn't a very popular one to get passive income, although it's possible. However, what you get for that low kind of payment and that low income is actually a lot of certainty. So you get a lot of security there. So if that's your concern, then that might be something for you. You can also find dividend-paying stocks. So there's a bit called the Falcon method, which talks about how you might find dividend-paying stocks that can help you increase income from your stock portfolio. Some stocks pay high dividends, so dividends is the kind of payment that goes out to investors, and some stocks pay no dividends. So it's about finding the stocks that will give you that dividend income. I guess the risk of getting passive income from a dividend stock portfolio is that the capital value of the portfolio will change very frequently, and it's very liquid. So if you don't like seeing the value of your kind of principal change a lot year on year or day to day or even second to second, then that might not be for you. However, I think lots of books I've read around, generating passive income have used the stock market just because returns have been quite good historically. So you can expect a decent amount of capital growth, and you can also get decent dividends as well. And then the final example is an annuity. So this is the actuary coming out at me here, but you can actually take a principal capital amount and invest in a annuity, and that annuity guarantees you pay you a certain level of income until you die. So that's the key bit. It's basically removing the risk that you might run out of money before you die, and vice versa. It's kind of eliminating the risk that you have too much money when you die. So you basically take your principal amount, hand it over to your insurance company. They have actuaries that work out exactly when they think you're going to die, and then they make sure that you're getting a reasonable payment throughout the rest of your life. Lots of people use this for when they actually retire. Rather than investing in the stock market, they would invest in something much more secure, like an annuity. So income investing has become extremely popular recently because I think a lot of people have realized that it's possible to live off investment income if you manage to save up enough capital. So the FIRE community is the community that made this popular. So financial independence, retire early. And the idea is that you work really hard for the first part of your life, build up a nice nest egg, and then retire on that and the investment income for the rest of your life. The thing about this is you have to actually save up quite a lot of capital to get decent income. So if you think about where interest rates or where dividend levels are at currently, even like kind of generous assumption would be 4%. So you need to save up about £1 million and have that invested before you can live comfortably on something like 40 grand a year. That is actually one of the limiting factors to generating passive income through investing, is you actually need to have a huge principal in order for it to have any impact. I remember first hearing about this via community, and I had a massive mental block on it, to be honest, because one, I thought I could never save up enough money, and two, I was like, I kind of like my job. And I think lots of people that get involved in the FIRE community tend to really dislike being in the corporate environment, but that was always something I actually quite enjoyed. So it was never something for me, although it's looking more appealing now, and definitely as I watch my kind of retirement savings build up, I'm actually very much looking forward to having that passive income. Point number 4 I'd like to make, which comes from my experience in the institutional world as an actuary and an investment actuary, is that income investments are typically used for a liability matching. So what you tend to find is some financial institutions like insurance companies or pension schemes need to pay out a certain amount over a period of time, and they call that liability. So for a pension scheme, it's the pension that they've promised their members. For an insurance company, it might be a kind of stream of claims that they might need to pay out. Income investments are usually designed to match those liabilities. So you get the income from the investment, and that's immediately used to pay whatever liability you have. So interestingly, you can do this yourself. So if you're looking to generate passive income from your investment portfolio, you can work out your liabilities, which is basically your lifestyle costs. So how much maybe rent or mortgage you want to pay each month, and how much living expenses you need each month, and then work out how much passive income you might need from your investment portfolio. And then that you work out your capital amount, and then that's your total savings target. I've never actually done this as well, mainly because all of my savings are for kind of long-term, like retirement type savings, or, for long-term needs. So I don't actually need any current income because I get enough from my current salary. So it's not something I've done, but definitely doing an exercise around your current liabilities and your current spending patterns would be helpful, because that probably helps you understand where you could save more or where you could potentially cut back on expenses, and what your number might actually be, because it might actually be lower than you expect. And then point number 5 I wanted to make is that investments that have some sort of payout or regular income typically tend to be lower risk than those that are all about capital appreciation. So if you're looking for capital appreciation, you might want to bear in mind this trade-off and say that actually I don't need any income, and I'm going to reinvest my capital and make sure that compounds at a higher rate. So in the stock market, you definitely find that dividend stocks tend to be kind of lower volatility or lower risk, and that's famously why Warren Buffett quite likes dividend stocks. Like if you look at a lot of the stocks in his portfolio, they all tend to pay quite high dividends, and that kind of fits with his value-based style. If you're looking in the bond market, bonds with higher coupons tend to be less risk because you're getting more of that income back earlier. So it's just something to bear in mind. And also with these different asset classes, you're taking on lots of different risks when you invest, so you have to be wary of those as well. So there we have it. That's 5 key points or elements or features about income investments. I wanted to caveat here that this is not investment advice, and I'm just basically talking about the different types of income investments that are out there and what you might use them for. And if you want to hear more from me, don't forget to check out this video here. Thanks.